quietly. That's how revolutions begin. No fanfare, no press conferences, just decisions behind the curtain. Santander, not a regional bank, a global powerhouse, 176 million customers, 1.8 trillion euros in assets. Dominates Spain, holds major weight in the UK, Portugal, Brazil, Chile, Mexico, even US branches under Santander Bank, primarily across the northeastern United States. When this level of legacy financial muscle flips on Ripple rails, it's not small, it's seismic. Now, money moves in seconds, not days. UK to US, Europe to Latin America, Brazil to Spain. Stone cold execution, zero hype. Why make the leap now? Because Swift is fading, slow, friction heavy, costly, unfit for a fast-moving financial world. Ripple fixes that. Settlement in 3 to 5 seconds. Transparent fees. Optional use of XRP as bridge. No pre-funded accounts needed. That's more than efficiency. That's billions in savings on one side, instant transfers on the other. But wait, the real dominoes are just starting to fall. Standard Chartered is expanding corridors. SBI Holdings is fully on board. PNC is integrating ODL quietly. Rumors say Bank of America is testing too. With every bank that goes live, Ripple's ecosystem grows stronger. XRP's role as the bridge becomes even tougher to ignore. And guess what? Whales are loading up. In the past 72 hours alone, big wallets accumulated 84 million XRP, over $200 million at current prices. That's not retail. That's strategic positioning. Meanwhile, Ripple's on-demand liquidity volume hit $1.3 trillion in Q2. Santander's Q3 corridor volume surged 40%, slashing fees by over 80% compared to Swift. This isn't hype. It's adoption driving demand. But here's the game changer. Central banks may soon step in. Even a 1% allocation of the world's $13 trillion reserves into XRP could push its price to $5 to $22. That's textbook leverage. Ripple just unveiled RLUSD, its USD-backed stablecoin, into Africa via Chipper Cash, VALR, and Yellow Card. That vault isn't just remittances, it's enterprise-grade treasury tooling going live. Ripple's pushing further with Thunes too. They've expanded their partnership for last-mile payments, covering over 130 countries, 80-plus currencies, and 7 billion wallets and cards globally. Meanwhile, XRP futures just hit $1 billion in open interest on CME, faster than any other crypto derivative in CME history. This is serious capital looking to hedge, not speculate. Let's get tactical for a moment. Imagine starting with $1,000 in XRP, but where do you pitch in? Starter, 2 to 5%, feels like risk, not reckless. Stack Builder, 2.5k to 10k XRP. You catch a move worth remembering. Whale Mode, 50,000 to 100,000 XRP. This isn't skimming, it's riding the wave. Institutional game, 200k plus XRP. Now you're shaking markets, not just surfing them. All while your portfolio auto-compounds as rails go live, corridor by corridor. But here's reality check for traders. XRP is holding $2.77 as a lifeline. Bullish setup near $3 remains key. Break above $2.95 to $3 with real volume, and we may clear for $3.20 to $3.60 first. Forecasts? Analysts see $4 by end of 2025 in the optimistic scenario, maybe $6 by 2026, depending on adoption momentum. Wall Street projections even talk $5 as a realistic target. Still not convinced? Then ask this. When whales accumulate hundreds of millions and proceed to stack more? When Santander goes live? When stablecoin rails reach Africa? When ODL hits record adoption? When XRP futures go institutional? Will you be chasing stories or capturing them? Adoption doesn't nudge price upward. It reprograms it. First quietly, then explosively. So I'll ask again, when the rails go hot, will you already be positioned? Thanks for watching. I will see you in the next video.